Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Thursday, April 23rd, 2015, and this is the Daily Report for Gold and Silver. We have had this oscillating market in the precious metals going on for the majority, if actually for the entire month of April. We're doing this in light of a day in which we had a tremendous rally in the equities markets. NASDAQ actually going to record highs, S&P trading to an all-time high before closing off of those highs. Let's look at gold. Gold has rebounded off those lows. It absolutely found, at least on a tentative basis, some support at that 1182 mark. Currently trading up about $7-8 on the day, 1194.52. The low has been 1184.90. The high has been 1197.70. 1200 obviously becoming resistance in the marketplace. We're seeing about the same kind of move, about 0.5% higher in the precious metals cross board, except for palladium. Silver trading up 0.57% higher, or 9 cents. It is below 16 though. We're trading at 1590, the low 72, 1572. We're just off of the highs at 1591. We'll touch on silver in a little bit. So traders, for a third time since really the end of March, we have seen this market in terms of pricing test the 1182 area right here, and on all three occasions the market has been able to find support and then trade above that. First thing that we're looking at. Second thing is, there's absolutely no question, but we are in this defined range. Upper level of the range is really right around, call it 1210, 1215 right in here. Of course, our tops are roughly at the 1220 area. That's the area that we really have to take out before I can get bullish. Otherwise, what we're really looking at is a market really trading sideways and choppy. Now, it's doing that in light of an equities market that's once again ramping up. The real question is will we see that particular market move continue? Because what we have seen in the S&Ps is that even though it comes up and tests these highs, it is also trading within a defined range. The difference with the equities markets, of course, is that range is a upward sloping channel line. And this is what I mean by an upper sloping channel line, in that we have our lower level resistance that cascades higher, of course, our upper level resistance, support on the bottom. And when it tends to get to the top of this area, it tends to come down. However, these channel lines are moving up, so you are getting a series of higher highs, but we are absolutely looking at this as current resistance in the market. We'll have to see how that plays out. Which brings me back to gold. The reason for pulling that chart up is there's no doubt the market is not going to continue to trade sideways forever. It's going to break to the upside or downside. And when we look at the way the market has traded, it's very rare to see the market trade this sideways. It's very, very much a market looking for direction. Will the Fed raise interest rates? Well, we know that they will. So it's not a matter of if, it's when. But more importantly, my sense of it is, even when they begin to raise rates, they're going to do it in such a way to continue to be, or perceive to be, an accommodative Fed, because they're not going to kind of muck up these wheels, this momentum that's building in the equities markets pretty much globally. That tells me that with a finite equity pool, all looking for places to move their dollars to get the best type of return, in that type of environment, I would be more surprised to see the market break to the upside than see it break to the downside. My sense is we will get a break at some point to the downside. Now, there's a couple of ways, as we talked about playing it. I kind of took it off the table yesterday because there was a real opportunity that we could genuinely see this market break below 82. And as I said, if it breaks below 82, my sense is it's immediately headed to 1170. And then we've got this low right here at 1141. These are our different targets. And then, of course, this being our all-time, not all-time, but call it our historical low. It's a historical low ever since the market went to 1920. And that, of course, these are the various targets that I'm looking at for the market to go. But to initiate that trade, we genuinely need to see the market break below these levels here. And you can see, once again, we've found support here, and we found support here. Now, to me, it's absolutely a matter of patience putting the trade on at the right point. I would rather be flat in the market than incorrect. That's obvious, but we need to make our dollars work. And so we talked about the option strategy. The fact that it moves back up into this area actually bodes well for that strategy. If the market continues to trade within these defined parameters, by having some sort of a option strategy in which you're writing the options and bringing in premium would be a profitable play, certainly more than you're going to get if you invested in interest rates in any bank. But the key is right now is what are the equities markets going to do, and how can we look at that? Oil moved up a little bit today, but to really understand this most recent move that we've seen in gold, traders, I seem like a broken record, but this again was primarily dollar based. We had the dollar weakening fairly substantially. We'll put up a chart in a second, but in regards to how that affected the overall price of gold, you had dollar weakness contributing $9.50% gain. Predominant sellers in the market really control the market. This was a selling day, and that brought it down about $2.20. So the positive change of net $7 plus is primarily a dollar weakness scenario rather than a gold buying entering the market. And traders, this is exactly what we're looking at. This is the dollar index chart. We talked about its relationship to gold and gold prices, but when we just look at a straight dollar, you can see on today's trading activity, this market has come down. This is our current level of support just above 97, market trading at 97.47. Which takes us to our silver chart. 14-day simple moving average has been trading well below it. We remain bearish as long as we're trading below this shorter term moving average. MACD has crossed now. We do have an up day. The up day, of course, as I said, is about 9-10 cents on the day. 3 cents to the negative is selling normal trading in the market. Plus 13 is a dollar conversion, meaning a dollar weakness. Net change up 10 cents is the subtraction of sellers from the weakening US dollar, and that's what's giving us this price. As I said, my target right now is about 15.50 and then 15.25. I think that silver is absolutely headed to that direction and to those price points. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.